So what is a cap rate all about? You hear us talking about cap rates all the time, and 5 cap, 3 cap, 6 cap. So a cap rate is a measure of the return on an investment. So let's talk real estate specifically. What a cap rate tells you is what the return on that investment will be if you're paying cash. It's an unlevered return. So it's a way to measure the return on that investment that you would get if it was unlevered if you were paying cash. So if it's $1 million property at a 5 cap, that means the net operating income after all the expenses is $50,000, right? So net operating income is your gross income minus expenses before amortization and depreciation or anything like that. It's like EBITDA for a business, NOI. It's earnings, it's your net operating income after expenses, but before the amortization or any depreciation or anything like that. So a cap rate is a very important metric to know. It gives you an idea of what the return on investment would be. It also gives you a way to quickly calculate whether or not the deal is going to cash flow. So if you know that you can borrow money at 3.5%, 4%, the cap rate's a 5, you got to pay equity investors back at whatever it is, a 6% preferred return, then you can do that math real quick and find out if that deal is going to cash flow. The other thing is you can quickly calculate debt service coverage ratios, things like that. You can calculate your break even. So the cap rate is a very important metric when evaluating a deal. It's also a metric used to communicate the value of what properties are selling for in an area. So the cap rate itself doesn't necessarily affect the value of the property. The income is what changes the value of the property. The cap rate is kind of a metric to use for what properties of like kind are trading for in a market. So, if you take a market like Orlando, Florida, and say, multifamily properties, 200 to 400 unit, suburban markets, class A, B, they're going to trade at a certain cap rate, probably 4.5, 5 right now, 6%, depending on the age of the asset. Class C properties are going to generally trade at a little higher cap rate. Class D properties, even higher cap rate. So usually what that tells you is the lower the cap rate, the better the property, the better the market. So in terms of average cap rates, market makes a big difference. The type of asset makes a big difference. The age, condition, location, all of those things make a huge difference. Every market is different. Real estate is hyper-local, so you need to know and understand what the going cap rates are in the different markets for the different assets. Office, retail, multifamily, hospitality, land. Well, land doesn't really trade as a cap rate, but industrial, self-storage, mobile home parks, those types of things. They all have their own KPIs, their own metrics, their own nuances, their own cap rate calculations and valuations. So that is a quick short video there on what a cap rate is all about, what it's used for, and why you want to know what the cap rates are in the areas that you're looking.